Okay, guys, so welcome along. It is Sunday, the 10th of September. And what we're going to do today, guys, this is mentorship. Okay, we're not here to take any trades. The markets are not open, but I am going to analyze the charts for you and give you basically a weekly outlook. And what I'm going to do is just work out. I'm probably going to spend more time on higher time frames when I do the analysis, because when we're not looking to take a trade, you don't need to be spending time on lower time frames. You use your time on lower time frames to get to the point where you're looking to take entries. And if we're not trading we're not trading on a Sunday period, okay, so we're looking to really work out directional bias for the higher time frames in where we would like to go. So first things first, as with absolutely anything, I need to see, and what I'm going to do essentially is walk you through how I approach it. Now, this could be me turning up on a Sunday night. This could be me here turning up on a Monday afternoon. Whatever it is, this is essentially how I look at the markets, what I look at. It's important to remember as well, guys, I don't claim to be a complete expert in the markets. You may have a different opinion to me with bias on a certain pair. So if you have your own analysis, you trust your own analysis, that is important. Just use what I'm doing as guidance for the way and how I'm organizing things and stuff like that. I'm pretty confident in my analysis. I'm right more than I'm wrong. I am wrong sometimes. But yeah, let's just see kind of what we've got going on. So obviously there's nothing for us to even think about today. Now, as we look ahead to the rest of the week, I'm going to keep all of these news impact events on. So tomorrow doesn't look terrible in terms of anything. And typically what you get on a Monday, which is why Mondays aren't the highest probable setups, is because you get manipulation. It's manipulation Mondays. Okay, and I'll explain what that essentially is and why it happens on those days. But Tuesday, moving into Tuesday, coming into London session, which these here, guys, is UK time, by the way. So obviously just bear that in mind for your analysis. I'm working on UK time zone. We've got a bit of pound news coming in here, and that pretty much sums that up. Now, we get a little bit spicier as we move into Wednesday. And even though I'm not trading this Wednesday because actually, I might trade Wednesday, depending on where I am at this point. But they're saying that, no, I won't, because it's CPI. Now, there's a couple of events I avoid trading. CPI is one of them. So I wouldn't be interested in even entertaining this session right here. Thursday, we've got these unemployment claims, Aussie news. I've no issue training on Thursday. We have got this here. It looks pretty busy. It looks pretty mad. I'd probably give that an hour or two till after that. And then we've got some more news to finish on Friday. So a nice volatile week that starts quite slow, gets pretty busy gradually. The only thing I really don't like the look of in terms of if there was a certain day I physically would not trade, it would be this situation here. I'm not interested in trading right here. So the first thing I'm interested in looking at here is where we are on the DXY. Now you don't have to be on the monthly timeframes all the time. You have to have an overall idea of where you potentially see price going. Now, bear in mind that we were in August, we're now in September, so we've opened up a new monthly candle. We've had a little bit of manipulation in this situation here. So the new monthly low currently lays around about here. It looks like it's pushing to the upside, and we are into the second week now. So whether or not we're going to start reversing or not, I'm not too sure of what's going to potentially happen. We spoke about this high here. We've spoken about this high here being the next target. So at this moment in time, just looking at where I see price from a weekly perspective, it doesn't look like we're in a hurry to actually slow down or anything like that. And when I look here at the daily, there's a couple of situations going on now. We spoke last week about this high being the first target that we wanted to see taken. We then spoke about this volume imbalance right here, which was another target we wanted to see taken. Now, what is quite interesting is that I can see that we've come into that area there. I'm just going to turn that into my plain box. We've come into this area right here, and we've actually reacted. So if you look here, we've come into the area and we've started to actually push lower. Now, what we have left in place is this imbalance right here. So I would like to see price come down here, but it's all dependent on what is going to happen on lower timeframes. Because if I just focus on this area here and I don't go down to a lower time frame, then price could move higher respecting lower time frames, and we could completely miss out on setups. But at the moment, I am still very, very bullish, and I actually think we're probably going to look to come for these equal highs right here. So that there would be my next target for the DXY. Now, how we get there is one thing, okay? But this is my target. It's clear equal highs. I'd like to see price move higher. In terms of what's going to happen this week, if we look at what's going on here, we can see a lovely big wick, which was created on Friday. So let's try and analyze what's actually going on inside this wick. So firstly, I'm going to measure this wick, and I'm going to just highlight 50% of that wick right there. And I've got these, like, if you look here, I've actually got all of this stuff measured right here. So you can see here, I can now delete that. I'm just going to say 50% of daily wick. So we've obviously got the low of last week and things like that. I don't think we're going to come, well, we might come for next week's low, but it doesn't look likely as in tomorrow. Let's just skip down to an hourly chart. So that's the wick. The hourly is pushed to the upside after sweeping this liquidity right here. So the hourly is setting us on a good footing. Let's look at the 4 hour. 4 hour is perfect as well. So look at this. Okay, 4 hour structure. Even though we've got the daily imbalance, we're following structure on the 4 hour, the 1 hour. Okay, we can see here 4 hour took this liquidity straight into this order block here. When we look at the 1 hour now, what we've got is price expanding to the upside after taking that liquidity. So in terms of point of interest to see if price can go higher, I do like this expansion. And better, this dotted line indicates the 50% of that daily wick. So already now, what I'm looking for, before even looking at anything else, I'm looking for price tomorrow to open, retrace, maybe down to this daily wick, and then maybe look to push higher, targeting these equal highs right here. Now, whether or not we're going to come for this imbalance remains to be seen. If we're going to come for this imbalance, it's all going to be dependent on what happens with this hourly range right here. So if this hourly range is to be disrespected and violated, then my thinking is that we're going to be bullish still, but I'm going to be focusing more so on this daily imbalance. I'm not worried about this imbalance right now. I'm not worried about this daily order block. I'm not worried about this imbalance. I'm not worried about this imbalance. I'm not worried about anything down here, because the 1 hour, the 4 hour is giving me enough so far to go by. I've analyzed this from the daily, the weekly, the monthly, all the way down. So far, look what we're doing. We've taken liquidity already. The 1 hour has been pushing higher. Now, there's two places you can measure the Fibonacci from. You can measure it from here, from the wick to the highest wick right here, and you will see we are in the discount level. Now, the other option you've got is to measure the body, which I know is completely valid. If you do that, you're in the kill zone of where we're looking to go. Now, in this instance, it doesn't really matter whether you use the wick or whether you use the bodies, because regardless, as you can see here, we're inside the discount level. And if we use the bodies, the wicks, sorry, we are also inside the discount level. Now, one thing to bear in mind is that we have got a large wick here. So once again, what I can do is, again, measure this wick. Let's measure 50%. Now, you could ask me here, why am I measuring 50%? 50%, guys, is equilibrium. 50% is a level that the institutions work from. So 50% is very, very important to be measuring. And why am I measuring the wick? Because there was significant price action that went on in here. Okay, price might come into this area here and then start accumulating, moving higher, and actually respect this body. So what we might get from an hourly looking candle is price coming lower and then closing here, so that actually the wick looks something like that. Okay, and then it might push higher. So whatever's in this 50% is worth us just inspecting. So we can now start looking at smaller time frames, and I'm just going to go down one by one to see if I can see anything at all. And I can see the body of this 15-minute candle. Nothing really apart from this 5-minute order block, which is right there. We've also got this imbalance in the 5-minute. So that's worth noting. Okay. So yeah, that's our range. We've got 5-minute area. Now, it might not come this low, guys. It doesn't have to come this low. And actually, what we've already got here is New York PM session liquidity in its own right. So we have got liquidity sitting right here as well. But overall, you know, I don't need to go into a lower time frame than this because we've kind of got what we're looking for. So I go back up to the hourly time frame. There's a couple of areas in there. We've got a lovely big order block. We've got a big push to the upside. I'm bullish. Okay, so to be clear, I'm still bullish. I'm looking for price to go higher. I'm going to be monitoring this area here. Like I said, if we disrespect this area here, we close below these bodies, we don't do anything in this 5-minute area, then I'm going to be paying attention to what happens at this daily candle. And that could happen this week, by the way. We're in a situation where we could do that. We've had 1, 2, 3 days of bullish action before we've had a doji candle. A lot of retail traders are going to be looking at this doji candle starting to sell anyway. That there tells me it gives you more reason to look for buys in here because there's going to be a lot of retail traders putting stop losses in here. So to confirm, I'm bullish. I'm bullish overall on this time frame, which means I am bearish on euro. So this is the beautiful thing about DXY, because now I know I'm looking for bearish moves on euro, bearish moves on Aussie USD, bearish moves on pound USD. So already I don't even need to analyze these pairs as in as much detail as what I did with the DXY just now, because the DXY is the leading pair in this instance. So if the DXY is running higher, we want the euro to move lower. If euro moves higher and the DXY moves higher, there is a correlation crack, divergence crack. It's not an ideal time in this situation to be looking for buys or sells or whatever, because it's going all over the place. Unless we're getting something called SMT, which, by the way, guys, I've just finished recording the next lesson on the premium course. You're going to learn all about that as well. So again, looking at the daily time frame, you can see the imbalance which sits in there. Now, what's interesting about euro is that in this imbalance, we've got the order block, breaker block area here. So that is an interesting spot in its own right there. So interesting there, breaker block, imbalance. But like we said, we're going to go down to a smaller time frame. We're going to see how this is looking. Now, you can see here it doesn't look as attractive as the DXY because we've not had as much of a big push, but we have closed below. So we can still be looking in certain areas. I like this 15-minute candle a lot more than I do on the DXY. So maybe tomorrow, price comes into this area here. We can get potential opportunities to the downside in there. And that would be good because we would take out a lot of liquidity down here, one of which being New York PM session liquidity. So I am bearish. I would like to see price go lower. Okay. The 15-minute looks pretty good to me at the moment. So yeah, hopefully we can see what's going on in here. Obviously it can. There's every chance tomorrow is going to be a consolidating day, because when we look at the news, not too much going on first thing. So maybe we're going to consolidate and get ready for high impact news events to do something like that on Wednesday or on Thursday or something like that. Now, something that's worth bearing in mind, guys, if I turn on the weekend charts right here. Now, tomorrow you're going to see another yellow line, which is going to basically indicate the weekend. Now, something to bear in mind when you look back at these weeks of what's previously happened, you've got high of the week created on Tuesday, low of the week created on the Friday. New week, low of the week happens on Tuesday, high of the week on Wednesday. Last week, it was all happening on Monday, going into Tuesday because we had a slow start, and then we dropped lower for Thursday. So Monday isn't always a great day to give you the overall bias. Now, I would like to be, as mentioned, I would like to be pretty bearish this week. If we're going to be bearish, maybe we are going to break this level here, push higher, but until the 1 hour is disrespected, I'm not going to be considering anything up here. I just want to be looking at what's going on in here. If I get a move to the downside in here tomorrow, I'm taking it. If it loses, if it stops me out, my maturity levels to take a stop loss in here and then change my bias to be looking up here instead, I'm perfectly fine with that. I'm perfectly fine with that. I can be looking all day long into this imbalance, but I'm happy to take a sell if we get that move in here, because this is intraday trading, guys. Okay, and if you can't take losses, then this is not the right environment for you guys. But that's essentially what I'm looking at there. Moving over to Aussie USD, it doesn't look as clean already. And this is the thing, I'm trying to work out which is going to be my preferred methods of looking to trade. I've got this breaker block here. I do see a couple of questions in the chat, guys. What I'm going to do is I'm going to do the outlook, and then I'll be ready to answer any questions that you guys have. Imbalance, breaker block. I like the fact that we have swept this liquidity here. So I am bearish. There's nothing. I mean, we've got this 1 hour order block here. So again, it's exactly the same situation. What is going to happen here? Are we going to break above there, or are we going to react in here? So really nice push up here. We've got a 15-minute order block. I'm going to keep the 1 hour open for now. I'm going to keep the 1 hour. I don't need to go any lower at this point. Okay, I don't need to go any lower at this point. And the thing is, guys, I can eyeball all of this to know that we're pretty much in a premium. Okay, you can see there coming up to the 50% in the premium. If you measure the bodies, you're well within premium anyway. So yeah, that's my bias. I'd like to see if price is going to come up to here, start distributing to come lower. Like I said, if we break this 1 hour area, I'll start thinking about maybe taking another high, maybe come to this order block or something like that. But that's essentially where I see things happening on there. Pound, again, look, we're pushing to the downside, as we can see. And again, the 1 hour is looking nice. I like it. Okay, so far this is looking pretty clean to start the week. Liquidity, we've got 1 hour candle right here. So I like that. I don't really feel too much of a need. I mean, we have got this 15-minute candle here. I might as well just highlight that because we've got imbalance and things like that. It's a night. That is the FU candle. FU standing for a candle which takes liquidity. If anyone doesn't know, but we talk about that in the course. So yeah, this is looking good. I'm going to keep an eye on this 1 hour, and then I'm going to keep an eye on this 15-minute. I also like this imbalance, which is in here. Like, guys, I hope you realize this is really simple stuff. I'm not looking to try and do anything smart or anything fancy. It's all about a drawn liquidity. The drawn liquidity for tomorrow is hopefully here above this range. You've also got a drawn liquidity here above this level here. If we take this liquidity and we get into London session tomorrow morning or New York session open tomorrow morning, and we start showing moves to the downside, clean entries, then I'm taking it, because it's all about time and price. And I've done my analysis. I've started on the DXY. It all looks pretty good. Everything seems to be correlating quite nicely. I'm very bullish on the DXY. I'm very bearish on these pairs right here. So that is Forex at the moment. And I will look at other pairs if you guys want me to. So once we've done that, I can check up any analysis that you guys have got going on. Now, looking over at NAS, because I noticed something earlier. And I spoke about this in a lesson, but essentially I'm going to give you a little crash course here. What I like about this, and again, I'm bullish, by the way. I'm bullish on these areas here. We've taken out this liquidity right here. Look at that. Now, we've taken out that liquidity there. And we've started to push the upside. We've got this daily area. We're inside this imbalance. Okay, the 1 hour. There's nothing really in there that I like. I don't need to go any lower at the moment. I'm just kind of focusing on the daily. At the moment, we're inside this imbalance. We could come a little bit lower. There's a lot of potential to come lower. The 4 hour range is bearish. So if we do essentially get a move coming lower in there, that's fine. The 1 hour's not done anything. So I need more information. I need to get to New York session tomorrow. I need some kind of expansion to the downside to have happened before I actually attempt to say anything. But overall, I'd like to see price move higher, but if it wants to move lower to do that, then that's fine. Now, when I look over at S&P, again, we've had the same type, not this one, but we've had a liquidity grab right here. So with a liquidity grab here, we've also had a liquidity grab here. So these two pairs correlate, but they also correlate here with the US30. Very interestingly, we've not taken any liquidity. What does that mean? That there, guys, is something called SMT, Smart Money Tool, which is essentially showing us that this price here is unwilling to go lower compared to S&P and compared to NAS, where price is willing to go lower. Now, I'm expecting bullish price action on these higher time frames, just based on the fact that we've come into this imbalance in here, based on the fact that we've hit this low and we have accumulated, we've come into this imbalance on S&P. I am expecting overall this high to be taken before this low is. So I would like to see price push the upside. So this week, I would like us to try, it doesn't have to obviously, or in the next 2 weeks anyway, I would like us to try and reach that high right there. The fact that we've had this liquidity grab, and the fact that we've had this liquidity grab here, and the fact that we haven't, it's proven to be higher relative strength. And it doesn't have to take this liquidity here because we're doing what's called institutional accumulation inside this area right here. And essentially, if we get accumulation in US30, which we're getting right here on the daily time frame, the US30 is actually a stronger buy at this moment in time than the rest of these two pairs here, because all three of them are correlating. All three of them are correlating very, very nicely, but we are unwilling to go lower here. So that's giving us strength. That's giving us an indication that this is the move that's pushing us higher, because we've shown slight weakness in the fact that we have come lower, but this is the liquidity run. This is the stop on liquidity here. And this is the stop on liquidity right here. So as you can see, US30 all of a sudden looks a lot better. Now, you've often heard me say before, I don't like US30. It's always a mess. It always just does its own thing. That's always because it maybe actually looks stronger. Okay, it looks stronger. So if you're looking to pick a pair tomorrow, what are you going to trade out of these ones? If we get an accumulation in here and it looks clean, they could all play out. They could all three of them play out. But this is the stronger of the two. Okay, this is the stronger of the two. And likewise, if you were trading on the DXY and the euro and the pound, and this was the DXY right here, and you're obviously going to be bearish moving lower. Let's just say you obviously want to look to be moving lower. We've taken that liquidity right there. Where is it? Let me just get this up. If the pound is showing a bit of an unwillingness to take that liquidity, so let's say they're all doing the same thing, they're all working in the same way. The DXY is bullish, which means we're bearish on this situation here. It's the same situation. If we are not showing a willingness, so if the pound is showing us this move in here, and this is the accumulation, but we haven't taken out that liquidity, the pound would be stronger than the euro. Okay, and that essentially is what we're looking to try and achieve. So I would like to see us move to the upside on USD, or all of them, to be fair, all of them. But I would like to see us move to the upside on there. So as a recap, these are the main pairs I always look to trade. I am more optimistic about taking trades on Forex tomorrow, only on the basis that I haven't had the information just yet. But I've worked out from doing my analysis, and I mean, let's be honest, guys, this has taken, what, 15, 20 minutes? It doesn't have to take an awful long time. I'm not using these Bollinger Bands. I'm not using the EMAs. I'm not using any type of indicator. I'm just using my eyes. I'm using pure price action. I'm not looking to do anything complicated. My methodology of trading is to keep things stupidly simple. And I want to keep things as simple as possible. So I know tomorrow, based on what we have done, if price comes into euro tomorrow during the London session, peak London session, or peak New York session, and starts distributing inside a point of interest area, I'm looking to take price lower. I've used my DXY analysis. The same thing's happening in here. Obviously, we're looking to go higher, and that's absolutely fine. That's absolutely fine. So I'd be happy to take these entries. And just a bit of a recap, what do I look for in price. If we've got a point of interest, let's say this is a daily time frame and we've come into this area. Okay, let's say I want to take price, where is it? I want to take price lower in here. Well, if this is a daily time frame, I'm looking in here on a smaller time frame. Okay, that's my point of interest area. I'm just going to turn it into a plain box. And inside the area there, price is going to be bullish on a high time frame. And we're going to look for bearish moves right in there. So that situation there is happening in there. Okay, so that is what I'm looking to do. I'm looking to take a sell inside this area here. It has to be a premium level. If I'm looking for a buy, it has to be a discount level. And that essentially is what I'm trying to do, guys. I'm not trying to reinvent the wheel. I'm not trying to do anything silly. I'm not trying to do anything overcomplicated. I'm not trying to scare anyone with any of this overcomplicated stuff. I don't trade Wyckoff. I don't trade any of that. I trade things simple. Okay, I keep things super simple. I've got two strategies, one being trading on the smaller time frames during the New York session, one being trading OTEs, optimal trade entries. That's it. All, and they're pretty much the same anyway. So hopefully you've got some value from that. Hopefully you can get a bit of an indication of where we're going. But just to recap, really on the DXY, I am bullish. It all depends on what's going to happen with this hourly area. If the hourly breaks lower, I'm still going to be bullish, but I'm going to be looking in this daily imbalance. Now, if we break lower, I'm going to start to think about price moving lower overall. But until the daily imbalance is violated and potentially turned into an inverse candle, then I'm bullish. But my first point of interest is to check out the 1 hour structure. If we react in here, go higher, great. Targets, these equal highs right here. So that's my overall bias for the week, guys.